You're listening to Investor Insights Decoded, the podcast where our hosts, Michael Grant and Julia Foster, break down the most impactful memos from the world of investing. Today, we'll be exploring Howard Marks's memo, The Value of Predictions, or Where'd All This Rain Come From? Written on 15th of February 1993. Let's dive into the timeless insights that continue to influence investors today. Hey everyone, welcome back for another deep dive. Today we're really getting into it. We're going to be talking about market predictions. You know those predictions we hear all the time?
Yeah, like, will the economy be good? Will it be bad?
Exactly. And this time we've got a great source to help us break it all down, Howard Marks.
Oh, yeah, he's the best. And in his memo, The Value of Predictions, he gets into why we should always be a little skeptical of those forecasts about the economy, interest rates, which companies are going to be the next big thing.
You know what I always wonder? Everyone dreams of timing the market perfectly. Buy low, sell high. How sweet would that be?
Right. If only it were that easy. And Marx gets that, but he says it's not as simple as it seems. Like, a lot of people think that if you're right about the market even half the time, you're golden.
Yeah, 50-50 odds. That's got to be good enough, right?
Well, not really, because even if you're right half the time, it's still not enough to overcome things like, trading fees.
Oh, and taxes.
Yeah, exactly. Plus, imagine missing out on a bull market because you're sitting on the sidelines waiting for a dip that never comes.
Oof. That fear of missing out can really get to you.
Yeah.
And something else I've always found fascinating is that even if you make a correct prediction, say, about economic growth, if everyone else is also predicting it.
It's already priced in.
Exactly. So
Yeah.
you're not gaining an edge.
Exactly. You're not some kind of investing genius for predicting the sky is blue. It's already baked into the market,
It's like when a company announces great earnings, but everyone already expected it. The stock price doesn't really budge.
Exactly.
Yeah.
To really get those outsized returns, you need to call the things nobody else sees coming, have a truly different view.
Which honestly is like finding a needle in a haystack. Or maybe more like finding that one specific needle in a stack of other needles that all look sort of the same.
Huh. And even if you're right, you need the guts to stick with your prediction when everyone else thinks you're crazy.
Right. It's that classic thing. If you're too far ahead of your time, people just think you're wrong.
Exactly. That's where true conviction comes in. And that's something Marx talks about a lot. It's not just about being right. It's about having the fortitude to act on those convictions, even when it's uncomfortable.
Which is easy to say, but so much harder to do in the moment.
It really is. And, Marx doesn't just explain why predictions are tough to get right. He also gets into why relying on them so much can really hurt investors.
Oh, in those sneaky ways you don't see coming.
Yeah. He talks about this thing, the hidden cost of constantly jumping in and out of the market based on predictions.
Because you think you've timed it just right.
You think you're outsmarting everyone, but you end up missing out on the biggest periods of growth while you're waiting on the sidelines for the perfect time to get back in.
That's like the worst.
Yeah.
Like holding off on buying that new phone, waiting for it to go on sale, and then bam, it sells out,
Yeah.
and you're stuck with your old busted phone.
Perfect analogy. And then on top of the missed opportunities, there's the actual financial cost. Like, every time you trade based on some prediction, those fees add up. And if those predictions are no more accurate than a coin flip,
Which, let's be real, a lot of them are.
you're just lighting your money on fire.
And here's something else that I think is so important that Marx brings up accountability. He's like, where are all the scorecards? We never see forecasters having to own their past predictions, good or bad.
Right, like a report card. Here's what I predicted last year, and here's how it actually turned out.
Yeah, that would be some real transparency.
It would definitely give us all pause before blindly following their next big prediction.
You'd be like, put your money where your mouth is if you're so sure.
Right. And it would definitely make you think twice about who you trust. But okay, so if we can't rely on those predictions, what's an investor to do? Marx says to focus on knowing the knowable, which sounds great, but what does that actually even mean?
It does sound kind of like a riddle, doesn't it?
Yeah, a little bit. But it's actually pretty straightforward. He's saying, instead of trying to predict the unpredictable, like which way the overall market will swing next, you should really pour your energy into the areas where you can get a deep understanding.
So kind of like becoming a master of a particular domain.
Exactly. Like instead of trying to know everything about the entire stock market, maybe become the world's leading expert on, I don't know, rubber ducks.
Okay, rubber ducks might be pushing it, but I get what you mean.
You get the idea. Marx himself specialized in things like convertible securities, which, if you're not familiar, are kind of like a 2-for-1 deal in the stock and bond world.
A hybrid.
Exactly. And he also got into things like distressed company debt.
Because those are areas where if you really do your homework, you can find those hidden gems, right?
Exactly. Information is key. But you know, one of the biggest traps Marx warns about is this thing we all do extrapolating from the past.
Oh, assuming because something happened a certain way before it'll just keep on happening.
Exactly. He talks about how we tend to just assume the future will be a repeat of what we've seen before. We take current trends and just project them forward without really stopping to think. Will it really be that simple?
So, like, assuming that because the stock market had a good year this year, it's guaranteed to be amazing next year, too.
Exactly. He gives this great example of people predicting droughts based on tree rings.
Tree rings.
Yeah. Like if you only look at the rings during a particularly dry century, you might assume droughts are way more common than they actually are in the grand scheme of things. You're only seeing a tiny sliver of history.
So you end up making decisions based on incomplete data.
Exactly. And that's what we do all the time with the market. And this whole idea of extrapolating, it's super dangerous, especially at those critical turning points.
There's moments when everything changes.
Exactly. Like right before a company's fortunes totally shift, trying to predict those moments is near impossible.
And even if you do see it coming, having the guts to actually act on it, that's a whole other story.
Absolutely. It takes serious conviction to go against the grain, especially when you know that for a while, you're probably going to look foolish. Most people are still stuck extrapolating the past. They haven't caught on yet.
It's like everyone's running toward the edge of a cliff, and you're the only one who can see what's about to happen.
And you're like, should I say something?
Right. But this is where that idea of Marx that we talked about earlier, knowing the knowable, it really comes into play, don't you think?
Totally. It's about having that deep understanding of value that gives you the confidence to trust your gut, even when everyone else thinks you're nuts.
So it's not just about having a different opinion. It's about having a really, really well-informed opinion.
Exactly. And it's about understanding that sometimes the market is just irrational. Marx talks about this a lot. But when you focus on what you can know with more certainty, you're less likely to get swept up in all the noise.
It's about tuning it all out and focusing on the fundamentals, which, let's be honest, is way harder than it sounds.
Oh, absolutely. It's a constant battle. Especially because our brains are wired to look for patterns. We want to believe that we can predict the future by looking at the past. But Marx is really pushing us to think more critically, to be more aware of our own biases and assumptions.
And to accept that we don't have a crystal ball.
Exactly.
It's about knowing you can always come back and invest another day.
Exactly. It's all about protecting your capital. You don't want to go all in on one big bet and have it blow up in your face.
And it all comes back to those hidden costs of trying to predict everything, doesn't it?
Yeah, because even if you're right about the general direction of things, if your timing is off just a little bit,
you can still get burned. It's like that saying, right too early is the same as being wrong.
It's so true. And that's why I think Marx is advocating for a more grounded approach to investing. You know, one that really understands that we don't know as much as we think we do.
We're not prophets, that's for sure.
Right. So we should focus on what we can control. Like we can control our own behavior, how much risk we're taking on, and whether we're chasing those, get-rich-quick schemes.
It's building a solid strategy and sticking to your plan.
Exactly. It's like running a marathon. You need endurance to win a marathon, not just a burst of speed at the starting line.
And you definitely don't want to trip and fall right before the finish line.
Exactly. It's a long game, and Marx really emphasizes that. But you know what I find really interesting? He actually says that even if he found someone who was amazing at predictions, who got it right almost every time,
you wouldn't hire them. Is that what you're saying?
Well, not exactly. He jokes that he'd be too busy trying to borrow money to invest alongside them.
Uh-huh. That's great. But it makes sense, right?
Yeah. I mean, if I had a crystal ball that actually worked, I wouldn't be sharing those predictions with just anyone.
You'd be up on a private island somewhere.
Exactly. I wouldn't need this podcast. But seriously, it makes you think. If someone is really so sure of their predictions, they should be putting their money where their mouth is.
Skin in the game.
Exactly. So as we wrap up this deep dive into Howard Marks and the value of predictions, I think the big takeaway is this. You don't have to be a fortune teller to be a good investor.
In fact, it's probably better if you assume you can't predict the future.
Right. So instead of trying to time the market perfectly or pick the next hot stock, focus on what you can control. Become an expert in your own right.
Find your niche. Learn everything you can about it.
And remember that investing is a journey. There are going to be ups and downs. The market will surprise you. But if you have a solid process and you can keep your head when everyone else is losing theirs, you'll be well on your way to reaching your financial goals.
Love that advice. This has been an awesome deep dive. Really makes you think. Thanks so much for being here and sharing your insights.
My pleasure. Always enjoy a good deep dive.
Until next time, everyone, happy investing.
And happy learning.
We'll catch you on the next deep dive.